Bitcoin has exploded onto the global stage, captivating the attention of investors, technologists, and everyday individuals. But what exactly is this digital phenomenon that has everyone talking? At its core, Bitcoin is a virtual currency, existing solely in the digital realm. It was created in 2008 by the pseudonymous Satoshi Nakamoto, whose true identity remains a mystery to this day. Unlike traditional currencies issued and controlled by governments, Bitcoin operates independently of any central authority. Bitcoin transactions occur directly between users, forming a peer-to-peer network. Imagine a digital ledger accessible to everyone, where every transaction is recorded transparently. This ledger is called the blockchain, and it forms the backbone of Bitcoin's security and immutability. Cryptography, the practice of secure communication in the presence of adversaries, plays a pivotal role in securing Bitcoin transactions. Each transaction is encrypted and added to the blockchain, making it incredibly difficult to alter or counterfeit. This cryptographic security ensures that Bitcoin transactions are safe and trustworthy. Bitcoin represents a fundamental shift in how we perceive and interact with money. Its decentralized nature, coupled with the security of cryptography and the transparency of the blockchain, has the potential to revolutionize the financial landscape. One of Bitcoin's most revolutionary aspects is its decentralized nature. Unlike traditional currencies issued by central banks, Bitcoin operates on a distributed network. This means that no single entity, like a government or financial institution, has control over the Bitcoin network. This decentralization brings several advantages. Firstly, it makes Bitcoin resistant to censorship. Since no single authority controls Bitcoin, no one can censor transactions or freeze accounts. This is particularly significant in countries with limited financial freedom. Secondly, decentralization enhances security. The distributed nature of the Bitcoin network makes it incredibly difficult for malicious actors to compromise the system. Instead of a single point of failure, like a central bank, Bitcoin relies on the collective power of countless computers distributed globally. This distributed architecture makes Bitcoin incredibly resilient to attacks. Bitcoin's decentralized nature fosters a more open and accessible financial system. It empowers individuals by giving them direct control over their funds, without relying on intermediaries. Bitcoin's security and functionality rely heavily on a process called mining. Miners are essentially the auditors of the Bitcoin network. They use powerful computers to solve complex mathematical problems, and in doing so, they verify and add new transactions to the blockchain. This process of solving cryptographic puzzles requires significant computational power and energy. As a reward for their efforts, miners receive newly created bitcoins and transaction fees. Mining serves two crucial purposes. Firstly, it ensures the security of the Bitcoin network by making it computationally expensive for malicious actors to alter the blockchain. Secondly, it introduces new bitcoins into circulation, albeit at a decreasing rate, until a predetermined limit of 21 million bitcoins is reached. This controlled supply mechanism is often cited as one of Bitcoin's key advantages over traditional fiat currencies, which are susceptible to inflation. The mining process is integral to Bitcoin's ecosystem, ensuring its security and controlling the supply of new coins. Bitcoin has garnered significant attention for its potential to disrupt the traditional financial system. Its decentralized nature, coupled with the security of cryptography and the transparency of the blockchain, offers a compelling alternative to centralized financial institutions. However, Bitcoin's future remains uncertain. One significant challenge is its volatility. Bitcoin's price has been known to fluctuate wildly, making it a risky investment for some. This volatility stems from various factors, including market speculation, regulatory uncertainty, and the relatively small size of the Bitcoin market compared to global financial markets. Another challenge is scalability. The Bitcoin network can only process a limited number of transactions per second, which could become a bottleneck as adoption grows. Despite these challenges, Bitcoin has captured the imagination of many, who believe it represents the future of money. Its potential to create a more open, accessible, and secure financial system is undeniable. However, only time will tell whether Bitcoin will achieve mainstream adoption and fulfill its promise as a true digital currency.